guys, I'm back today with a very interesting topic, and this is a question that I've been getting from some of my clients and some of my friends who are still confused about where do they begin when it comes to saving and the difference between money market fund and a SACCO. And today we are going to discuss those two, and you'll decide which one do you think you need. And I think we need both of them. You just need to know the difference and how are each of them going to meet your financial goals. So that's the topic for today. If you haven't subscribed, please subscribe down below there. For the new people, my name is Sheila. Welcome to Sheila's World, where we discuss so much when it comes to money matters. So if this is the kind of topic that you enjoy, hit that like button and let's get down to today's topic. I hope you've already liked the video, and so let's get down and see what are these two money saving instruments that we should all have at least in our career or in our saving journey. For those who don't understand, SACCOs are just savings and credit cooperative societies, which are usually owned by members, people who have common goals, let's say people in an organization. SACCOs have become alternative to traditional banks, whereby even some SACCOs have grown up to become banks by themselves. Like they have enough money that they can run a bank. So even like teachers, cooperative society, the TSC, they have a big SACCO that has, like, it is like a bank to them. Their salaries goes to their SACCO instead of going to the bank. They are heavily regulated, and also the funds are managed by professionals who work around the clock to protect members' money. One of the advantages is that ownership and the fact that it has higher returns. When you buy shares in a SACCO, you become part one of that society, the cooperative society. So the value of shares can appreciate in a SACCO, and that's where you end up earning interest and dividends. So in SACCO, you earn interest and dividends as a member. That's one of the benefits that maybe you don't get in a savings account in a bank or even in a money market fund. So SACCOs will allow you to borrow against your shares and deposits, and you can be able to get loans faster, unlike when you save in a bank and you ask for a loan. So bank has a lot of requirements for you to get a loan, unlike SACCOs, whereby as long as you're a member, you just need guarantors, people are maybe your colleagues, to sign up for you and you get your loan. Then there's that saving discipline. Since there are minimum requirement, where minimum savings that you are supposed to deposit every single month, it creates that discipline when it comes to saving. So you are forced to save as in every single month, and that is a long-term way of saving. So when you join a SACCO, you commit to making a minimum deposit every month, and this will develop that saving culture in you, and you'll be forced to stay committed to the goal. There are so many other, like, emergency. You can apply for an emergency fund in a SACCO and get it within the shortest time possible. So there are so many other services that SACCOs offer. So we also have, besides advantages of SACCO, we also have disadvantages. So some of the disadvantages that you need to know is that when you want to borrow, you need to have guarantors. Sometimes getting guarantors to sign up to the level of loan that you want is a bit tricky, since maybe you might have guarantors who can only sign up to a certain limit. That's where now bank beat the SACCO. You're able to get more bank loan if you qualify, unlike in SACCO where you need guarantors to ensure that you get the loan that you want. So you need collateral and guarantors to borrow. You can only borrow against your shares and deposits. So these can limit the amount of loan that you can access in a SACCO. So I think that's the main headache when it comes to SACCOs, the fact that you need guarantors. Then there's that liquidity problem. With the SACCOs, whenever you want to access your money, you can't just wake up tomorrow and write a letter like, I need my money in 2 days. No way. So it's not somewhere where you can say you are saving for an emergency. SACCOs, you need to give notice, at least 2 months to 3 months notice, so that you can get your deposit if you need to withdraw. The only way you can access your money is usually through getting loans. And again, the loan, in not all SACCOs you get them instantly. It can take months. So it's not something you can count on when you have an emergency. And so that really make the SACCO not being very attractive to some people. Another disadvantage is that we have no say. As a SACCO member, you don't have no say where the money is being invested. You don't even know where the money is invested. As much as we know it's being regulated, but we are not sure where the money is invested. So whether they're investing in high risk assets, we are not sure. So we are just there hoping that the officials, the members, the people in charge are going to invest our money the right way. Another disadvantage again with the SACCO, it's not insured. Unlike money in the bank that is insured. In case something goes bad with your SACCO, you lose your money, you go down with it. So that's another disadvantage. So whenever you're thinking of saving, those are the disadvantage, the things you should look out for. Whenever you want to save, it depends with your goal. You need to have a goal. What is your goal? Do you want to enjoy dividends and interest every year? Do you want to take a loan? Usually I go for a SACCO only if I intend to take a loan with them. Dividends, again, yeah, that's another attractive purpose of a SACCO. Usually the interest most SACCOs they give above the inflation rate, which is that has an added advantage. So if you want to keep money for long-term saving, then SACCO is the best place to go, but not for emergencies. And that's why I say there are two ways. You need both. You need a SACCO and you need a money market fund. And shortly we are going to see why you also need a money market fund besides a SACCO. So given their high returns and capital appreciation, SACCOs are the best suited for people investing for long term. So for SACCOs, if you're thinking long term for your long-term goals, then go for SACCOs. For development, let's say acquiring land, building a house, I think SACCOs sometimes play a big role in such goals. So they can help you keep track of your saving goals since you must contribute a minimum amount monthly. So you can also reinvest the interest that you get and dividends. Hence, your money will grow and you earn even more. So some long-term financial goals you can chase using SACCO. These include things like retirement, even school fees for the children, college tuition, and even saving to buy a house. SACCO can be a best avenue for you. So if you haven't liked the video, please give it a thumbs up as we move on to the next stage about money markets. So with money market funds, I've talked about this before in my other videos. I think a number of videos I've already discussed about money market funds, which again are just another avenue of saving and investing your money, but now with a different kind. It's a bit different from SACCOs. Unlike where SACCOs you are able to borrow loans, the money market fund you don't take any loan, it's just your saving and you can withdraw anytime you want. So money market funds are just under the umbrella of unit trusts, whereby it's a collective investment whereby many people come together, either through, you can open a money market fund in an insurance company. Usually it's run by insurance companies under the asset management department, not under the insurance. You need to differentiate that. Money market is run under the asset management department of an insurance company. Insurance is different. So with the money market, that is not insurance. It's purely savings and investment. So with the money market fund, people with the same interest come together, save, and then the funds are pulled together. They're invested in assets, in low risk assets. And that's why I said money market funds are low risk investments whereby your money is secure and safe. So whenever you're thinking of investing in a money market fund, if you're not a risk taker, it's the best place for saving for your short-term goals. And what are these short-term goals? Short-term goals could be your emergency fund. Usually we need to have at least emergency fund, money that you can access within a day should you need it. Within a day or 24 hours to 72 hours maximum. So I find money market funds the best place to save for an emergency fund, since the money is earning interest as you save for the emergency. So things like, let's say short-term, next term school fees, it's money you can put in a money market fund. Things like emergency fund, you can put in a money market fund. So it's relatively safe and heavily regulated by the Capital Markets Authority. So that makes it even safer since it's regulated. So mostly the money in the money market funds are invested in short-term securities, things like T-bills. I think I've talked about, if you don't understand about treasury bills, just revisit my video. Just check one of my last 3 videos. There's something on treasury bills and bonds. So which they always have a maturity of 3 to 6 months to 1 year. So usually the money market funds are invested in the treasury bills and also in the corporate bonds, in short-term commercial papers like overnight lending to other institutions, and also in the fixed income deposits. Under money market, one of the disadvantages is the fact that accessibility. It's very easy to withdraw your money when you need it. It's money you can access in short notice. In 1 to 2 days, you have your money in your account. And sometimes if it's low amount, instantly, you get instantly via your M-Pesa. So it's easy to withdraw. So again, the low transactional costs. Transaction costs are shared among all the investors, which translates to money market funds investors paying nominal fees. So you pay less fees because of the collective investment. You are many. The advantage of economies of scale. So again, anything with the advantage has a disadvantage. Give the video a like as we continue. And also, if you haven't subscribed, please subscribe. Now, let's get to one of the disadvantages. Since it's not government insured, the money in the money market funds are not insured. So you're likely not to be compensated if anything goes wrong and the initial investment amount is lost. So just know the money in your money market fund is not government insured, unlike in the banks where there's KDIC, where that ensures that your money is insured. Then returns are not constant. Returns keep varying. You can't promise like a fixed rate of return. It can be this month we are at 9, next month we are at 8%. So it keeps varying, and then at the end of the year, what they do is an average rate of return. But at least it's not really bad. It's better than keeping money in your bank account. So returns are not constant. Then, like SACCOs, there are no dividends on money in the money market funds. Money market funds only offer the interest, and the interest is taxed at 15%. So there is no appreciation or dividends. When you invest in money market funds, you are not buying shares. So therefore, only return you will earn is interest on your saved amount. There will be no ownership for you to earn dividends, and cash doesn't appreciate. So that means you're losing your purchasing power, right? So what are money markets best for? So given their high liquidity and accessibility, money markets are best for people saving for short-term goals. As I said, short-term goals. Write down what are your short-term goals. It could be next term fees for your kids. It could be you want to buy something in a month or 2 months time, or even for December, for Christmas. So those are very short-term things that within 3 months, 6 months, those are short-term goals. So what should you consider when you are deciding between SACCOs and money market funds? What should you consider? You need to consider time. How long are you intending to save this money? If it's for short term, maybe you just want to save within a year and maybe acquire something, I would say go for money market fund. If you are intending to take a loan, to borrow, or enjoy dividends, and your saving goal is long term, then SACCO will work well for you. So this one, mostly for beginners, it can be really challenging to choose which one, and especially when the money to be saved is not that much. So try and see which one can work for you, and I know you've learned something here. If you have, leave a comment below. Let me know what you think about the two, which one is your favorite. But my parting shot is that we should have both. Let's all have at least a SACCO, so that we have long term, we have ownership in the company, as well as we enjoy credit facilities, as well as enjoy dividends and interest. And then we should have our emergency funds ready in the money market fund. I think that's what I have for today. If you've enjoyed the video and you haven't given it a thumbs up, please do. And I'll see you again in my next video. Bye bye for now. Good day.